Ethereum has been rallying like crazy, but attention is starting to turn to Solana, which could be next in line for a massive rally. This means that it's high time to check out Solana's top projects, since these could significantly outperform Sol when it takes off. Today, we're going to tell you about the top 5 altcoins in Solana's ecosystem, including what they do, how they work, and just how high they could go. My name is Lewis, and you want to lock in on this one. Now, before we begin, I'm not a financial advisor and nothing in this video should be considered as financial or investment advice. This video is purely for your education and entertainment, and it's intended to inform you about the 5 awesome Solana altcoins. Another thing that you need to know is that some team members at Coin Bureau do hold some of these tokens in today's video, but we promise to be as objective as always in our analysis. And if you want to buy any of these cryptos mentioned today for yourself, then you should definitely check out the Coin Bureau deals page, because that's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do is just hit that link in the description or scan this QR code, which will take you exactly to the deals page. Then simply find a deal that suits you and click one of the sign up now buttons. These deals won't be around forever though, so take advantage of them while you still can using the link in the description below or, as mentioned, the QR code on the screen now. Anyways, kicking off today's top 5 list is Jupiter. Many believe Jupiter is just a DEX on Solana, but that's not quite accurate. It's actually a DEX and liquidity aggregator. I'll explain what that means in just a second. First though, Jupiter was founded in May of 2021 by 2 co-founders of the Meteora DEX, Ming Ng, who goes by the pseudonym Meow, and Ben Chao. They launched Jupiter in October of 2021. So, how does Jupiter work? Well, to get the best prices, it aggregates liquidity from multiple DEXs, including central limit order books, aka CLOBs, and automated market makers, or AMMs. Jupiter finds the optimal swap route, sometimes splitting a trade across multiple exchanges, but for the user, it all happens in a single transaction that takes seconds. This effectively solves DeFi's liquidity fragmentation problem, at least on Solana. And for those unfamiliar, liquidity fragmentation is simply when a token supply is spread across different liquidity pools and exchanges, which creates market inefficiencies like greater risk of slippage and market manipulation. But that's not all. Traders on Jupiter can place limit orders to buy at specific prices, a feature rarely seen on DEXs. Users can also set up DCA strategies to buy crypto at regular intervals, and those brave or foolish enough can trade perpetual futures with up to 100x leverage. For those seeking steady yield, Jupiter's Lend feature will let users lend and borrow crypto on the platform. It just came out of private beta and is now in public beta as of late August. The protocol is also developing a stablecoin, reportedly backed by Solana liquid staking tokens. And if all that wasn't enough, Jupiter even lets you launch your own token using something called Jupe Studio, which describes itself as, quote, the complete token suite. There are other features too, but you get the point. Jupiter offers something for every Solana user. But that's enough talking about the end product. Let's talk about the actual token. In January of 2024, Jupiter launched its Jupe token via an airdrop, with roughly 700 million distributed to nearly 1 million wallets, one of the largest Solana airdrops ever. It was airdropped again this January with about 600 million distributed. After the second airdrop, Jupiter announced it would use 50% of all protocol fees to buy back Jupe from the open market and place it in a long-term reserve called the litter box. Yes, that is another cat reference. Now, Jupe hit an all-time high of $2 at its January launch last year, but its price action has been lackluster since. At the time of recording, it's down 76%, so a return to $2 would mean roughly a 4x. The question is, can Jupe reclaim or even surpass $2? Well, it wouldn't be the first time Jupe ripped higher. Between February and April of 2024, it shot from below 50 cents, roughly where it is today, to around $1.75. With altcoin momentum building, plus Jupiter's growth and ecosystem plans, a conservative $3 target seems reasonable, which is a potential 6x return. And by the way, if you're enjoying this video so far, then be sure to smash that like button and subscribe to the channel. Also, ping that notification bell so that you don't miss the next one. Now, the second top Solana project is Pump.Fun, a launchpad that reshaped the meme coin scene. It was co-founded in 2023 by Noah Tweedale, Alan Cohen, and Dylan Curler, three meme coin enthusiasts who got sick of rug pulls. They built Pump.Fun to let anyone launch tokens with standardized rug-proof rules, with the idea to put everyone on the same playing field. The platform launched in January of 2024, and since then, it has raised over $1.3 billion through sales of its native Pump token, $720 million from private sales, and $600 million from its ICO. Pump.Fun has made launching a token easier than ever. Before it came along, every parameter had to be coded manually, and teams had to supply enough liquidity for trading. Pump.Fun abstracted away these complexities, letting anyone launch a meme coin at near zero costs. This very simplicity sparked Solana's meme coin mania last year, boosting demand for SOL and helping drive its price even higher. To try and protect meme coin traders, Pump.Fun uses an innovative bonding curve model, which dynamically adjusts token prices based on demand. The model also includes a burn mechanism to manage supply and reward early holders, strengthening liquidity while reducing price manipulation. Moreover, every Pump.Fun project is fair launched with a supply of 1 billion tokens and no pre-sales or team allocations, preventing insider dumping. Once a token grows large enough, it's automatically listed on PumpSwap, the platform's native DEX, making it available to even more investors. PumpSwap was launched in March of 2025 and saw $1 billion in volume its first week. In April, the platform brought back its live stream feature, which had previously been removed due to some disturbing content that I will not be going into here. And in July this year, Pump.Fun unveiled the launch of the Pump token. What's nuts is that Pump's 500 million ICO sold out in just 12 minutes. For those wondering, Pump is a utility token designed for governance, incentivizing growth within an ecosystem, and, in Alan's words, quote, killing Facebook, TikTok, and Twitch. But how has Pump performed since it was launched in July? Well, to be honest, folks, not too well. In the first 2 weeks, its price plummeted around 65%, and it hasn't recovered since. As of recording, Pump is down 77% from its all-time high of 1.2 cents. The question is, can Pump recover? To be frank, it'll be an uphill battle, largely depending on crypto degen sentiment. If investors keep chasing riskier tokens like meme coins, then it could boost Pump's price. But if they flee to safety, Pump might struggle to, well, pump. That said, the meme coin space is showing signs of revival. Recently, Pump.Fun's reclaimed its spot as Solana's top launchpad, gaining 73% of the market share in just 7 days. When you realize that a portion of Pump.Fun's protocol revenue is used to buy the Pump token, you understand that this means that more pumps could be in order. As for whether Pump can rally to new all-time highs, well, we wouldn't rule it out. I mean, this is crypto and anything can happen, especially in the meme coin market. If this does rally though, a conservative target might be around 1.5 cents, which is about 5x today's price. Now, the third top Solana project is Jito, a liquid staking protocol offering MEV-enhanced rewards. And yes, I'll explain what that means in just a second. Jito was founded in 2021 by Lucas Bruder and Zani Sherwani, launching its liquid staking functionality in October of 2022. Jito raised $14.2 million across 2 rounds in 2021 and 2022. Now, as I just mentioned, Jito offers MEV-enhanced liquid staking. But what the heck does that actually mean? Well, let's start with the liquid staking part. You see, staking a crypto like SOL, it locks it up, and you can't do anything with it once it's locked up. With liquid staking, you still stake as usual, but you receive liquid staked tokens or LSTs in return. These LSTs are like receipts, reflecting how much SOL that you've staked. In Jito's case, these receipts are called Jito Sol. You can do just about anything you want with these receipts while your Sol remains locked and earning rewards. That includes trading, lending, borrowing, you name it. You could even sell your Jito Sol if you want. Now, the MEV aspect is where Jito takes this one step further. MEV stands for Miner Extractable Value in Proof of Work cryptos like Bitcoin, and it stands for Maximal Extractable Value in Proof of Stake cryptos like Solana. Essentially, it's when a miner or validator shuffles transactions around within a block to maximize their own rewards. What's unique about Jito is that it also runs validator clients, and it uses a portion of the MEV rewards from validators using its software to increase the yields for Jito Sol holders. As such, Jito Sol holders don't just earn the yield from the staked Sol backing their receipt, they also earn a yield from the MEV Jito's validator client is extracting from transactions on Solana. Of course, Jito also has its own governance token. It's called JTO, and it launched in December of 2023 via an airdrop. The drop favored smaller wallets over whales, which was great for network participation, but definitely ruffled some feathers among larger investors. Since its launch, JTO's price has ebbed and flowed with broader market trends, but has shown resilience despite being down about 64% from its all-time high of $5.61, at least at the time of recording. This was when the token's airdrop launch was initiated in early December 2023, after which the price quickly dropped as traders rushed to cash out their free crypto. That said, JTO has rallied several times since, coming close to a new all-time high. Between January and April 2024, it climbed over 3x to around $5.28. Close, but no cigar. Still, the chart looks strong, and we think it's only a matter of time before it surpasses its previous high, especially considering Jito is like Solana's version of Ethereum's Lido Finance. Consider that Lido LDO has a multi-billion-dollar market cap, while JTO sits in the hundreds of millions. As such, we estimate a conservative target for JTO to be around $9, roughly 5x today's price. And the fact that Jito is discussing using a portion of its protocol fees to buy back the JTO token seems fairly reasonable to me. Now, the fourth Solana project in today's list is Camino Finance. Camino is actually a project that we've done a deep dive review for in the Coin Bureau Club. And if you want to see what other promising altcoins that we've covered in the club, then consider becoming a member by signing up using the link down in the description. For the purposes of this video though, we'll stick to the basics. Camino is a DeFi protocol that features a mix of lending, liquidity provision, and leverage. It was created in August of 2022 by Marius Chubotario and Mark Hull, the team behind another project called Hubble Protocol. This is significant because while Camino hasn't raised funds of its own, Hubble raised tens of millions, specifically 17.8 million between August of 2021 and September of 2022. Some of that undoubtedly helped Camino get off the ground. Sadly, Hubble became one of the many casualties of the FTX collapse in November of 2022. However, what's fascinating is that Camino started out as a liquidity protocol, similar to Meteora, which helps keep Solana's DEX trading pools liquid. But in November of 2023, Camino expanded beyond DEX liquidity to offer borrowing and lending services. Camino's dual function as a liquidity protocol and a lending platform means that it's built on two primitives: automated liquidity vaults and Camino Lend. Automated liquidity can be confusing, but the gist is that it just lets users provide liquidity to Solana DEXs by depositing two tokens into a trading pool and then earning a share of that pair's trading fees. This is all pretty normal, but Camino stands out by using concentrated liquidity, focused within a set price range. For example, you could provide USDC and SOL to a pool and concentrate that liquidity between $200 and $300. This maximizes swap fee earnings while reducing the risk of impermanent loss, where you'd end up holding more of the lower value token. What's more is Camino automatically adjusts this concentrated liquidity range to maximize your returns. Even better, you can deposit just one token into a pool, and the protocol will automatically swap half of it into the other token behind the scenes. Anyway, when you provide liquidity to Camino, you receive K tokens, which are basically Camino's version of an LST. These can be traded like any other LST and even used as collateral in Kamino's lending protocol, letting you borrow against the crypto that you've already put to work. Pretty impressive stuff. Thankfully, Kamino Lend is much simpler to grasp. Like other lending protocols, you deposit a dollar amount of crypto higher than what you're borrowing. But thanks to K tokens, you can use looping strategies to multiply deposits. For instance, you can deposit SOL, borrow staked SOL, use it to borrow more SOL, deposit again for more staked SOL, and so on and so forth. Kamino also has some other insane features that are beyond the scope of this video, but remember, you could always join the Coin Bureau Club to get all of the details. The link is down below. Now, Kamino's KMNO token launched via an airdrop in April of 2024, after a months-long points campaign that began the previous December. The point system foreshadowed an eventual airdrop, which helped Kamino's TVL surge by an incredible 1000x during that period. Unlike other airdrop tokens on today's list, KMNO has shown incredible resilience since its launch. In December, when Solana's ecosystem was going into a frenzy, it hit an all-time high of around 24 cents. As I record this video, a return to that level would mean a gain of over 4x. But given the DeFi wizardry possible on Kamino, institutions could easily jump in to maximize yields on large cash reserves. This would drive KMNO even higher, with a conservative target of around 50 cents, nearly a 10x from today. Its relatively low market cap makes this much more achievable, since less capital is needed for multiple X's. Okay, so the fifth Solana project in today's list is Pyth Network. Incidentally, another project that we've reviewed in the Coin Bureau Club. Pyth is a data oracle like Chainlink, putting real-world data on-chain. The main difference is that Pyth is much faster. Pyth was founded in April of 2021 by Jump Crypto, the crypto arm of Jump Trading, whose roots go way back to 1999. As a fun fact, the name Jump comes from its traders literally jumping up and down on the stock trading floor of the Chicago Mercantile Exchange. Jump Crypto chose to launch Pyth on Solana because at the time, it was the fastest blockchain. This is important for reasons that we'll come to later. Pyth has raised an undisclosed amount across 3 funding rounds, a seed round in July 2021, followed by a venture round in January 2022, and another venture round in December of 2023. Pyth debuted on the Solana blockchain in August of 2021. That same month, Jump Crypto acquired Wormhole, a cross-chain bridge to further expand Pyth's reach. As a result, Pyth is multi-chain, supporting more than 100 different blockchains with more than 1,600 price feeds across all major asset classes. This begs the question of how Pyth works. Well, 1 year after its debut, Pyth launched its own blockchain called PythNet, which was created due to Solana's repeated outages. PythNet is essentially a private permission copy of Solana. However, unlike Solana's proof of stake, PythNet uses proof of authority, where validators are selected by Pyth. It has over 120 data providers, known as publishers, largely consisting of major financial institutions thanks to Jump's Wall Street connections. What sets Pyth apart from other oracles is that Pyth's publishers they'll publish data feeds directly to both PythNet and Solana simultaneously, which is then sent to other chains through Wormhole. Unlike other oracles that use nodes to aggregate and publish data, Pyth's pricing data is rated based on how confident validators are in the data that they provide. This approach allows dApps to pull data from Pyth only when needed, rather than constantly receiving updates like with most other oracles. In turn, this makes Pyth much faster and more cost-efficient. The Pyth token was launched via an airdrop in November of 2023, and it can be staked for governance votes or for supporting oracle integrity. After its launch, Pyth rallied to a high of $1.15 in March of 2024, but has fallen sharply since, down 90% at the time of shooting. Logically, a return to that high would be roughly 10 times today's price. Whether Pyth could surpass this level depends on several factors, but arguably the biggest is whether Pyth sticks to Solana or moves to faster, more reliable chains. That's simply because for Pyth to stay at the top of its game, it needs the highest speed chain. And come to think of it, it also needs a chain without a history of outages. Incidentally, Pyth partnered with Aptos in July of last year, hinting at upcoming support. This is notable because Aptos is a so-called Solana killer, which can theoretically handle up to 160,000 transactions per second versus Solana's 65,000. Fire Dancer upgrade notwithstanding, of course. In any case, from our perspective, Pyth does have a pretty good case to get back to its all-time highs. Pyth is arguably the next chain link, and with Link's market cap in the tens of billions versus Pyth's in the hundreds of millions, Pyth's potential for growth is huge. We believe Pyth could one day be a blue chip, not just in Solana's ecosystem, but for crypto in general. In our opinion, a conservative price estimate for Pyth would be around $2, about 20x from today's price. But this is certainly up for debate. And okay, that's going to be it. That wraps up our top 5 Solana projects. Let us know which ones that we missed and which ones you think deserve to be on this list. Let us know in the comments below. And if you want to see our top 5 Ethereum project picks, then check out the video right over here. And if you want to prepare for the next cycle top, then check out the video right over here. Thank you so much for watching, and we'll see you in the next one. This is Lewis, over and out. And hey, what do you know? As soon as I finished recording this video, the US Department of Commerce actually came out and said that they're going to get the Pyth network to actually verify and distribute their on-chain economic data. And that actually caused Pyth network to skyrocket 100% in just a few hours. Only in crypto, right?